All right. We are back for an episode of the Halftime Show. This is the episode 4 of the Halftime Show, your midway market recap for the market, covering the NASDAQ and the SPY. And today we are going to be covering Tesla, AKBA, APLD, and of course SPY. And we're going to be going over some great details on some strategic ways to recognize opportunities in the market. All right, I am your boy, Coach UV, and this is the Unique Trading Group, where strategy meets mindset and discipline turns into income. I don't want to waste you guys' time. I know what you came here for, right? So let's go ahead and hop into the lesson. All right, this is your episode 4 of the Halftime Show. All right, now this is a precision trading 3-step trigger system. All right, I'm going to introduce to you, as well as in conjunction with the overall information for the day. All right, this show is going to be an interesting one. Right, it's going to be an interesting halftime show. You're going to get some good game and you're going to get some guidance. All right, into one. All right, so I am Coach UV, your trading mentor. All right, today we're going to be talking about bear traps, bull traps, using stops as fuel. Right, when to buy calls and puts, the best entries and exits using these bull and bear trap techniques, right? And the 3 day types to put it all together. All right, before we get into the charts, I want to let you guys know what a bear trap and a bull trap is, right? I'm pretty sure you're wondering what that is, right? Okay, so a bear trap, a false signal indicating a reversal of a rising market leading to investors to sell prematurely. And it's the complete inverse for a bull trap, right? Which means we want to take a trade to the downside, right? A bull trap is a false signal indicating a reversal of a declining market. A false signal indicating a reversal of a declining market, leading investors to buy prematurely. All right, that's what a bull trap is, and that's what a bear trap is. All right, what does this mean internally? What does this mean internally? Well, I think it means this. All right, this is what it means internally. Market makers and algorithms use sophisticated tools to analyze market data and predict those movements, all right? By understanding the psychology behind investor decisions, they can anticipate when stops will be triggered and position themselves advantageously, okay? Market mechanics around stocks as fuel rely on exploiting human behavior, all right? This is when you're using stocks as fuel. This is what's happening behind those movements. Particularly mistakes and emotional responses. When investors make errors such as setting stop loss orders too tightly, it creates opportunities for market makers and algorithms to capitalize on these movements. Alright? Moving on along. And again, this is understanding what bear traps and bull traps are. Like, what are the market mechanics behind that? Why is this happening, right? Stop loss orders are designed to limit losses, but they can also trigger a cascade of selling when prices dip, providing fuel for market makers to buy at low prices. This mechanism is respected because it consistently creates predictable price movements. I'm going to read this one again, okay? This is my favorite one. Stop loss orders are designed to limit losses, but they can also trigger a cascade of selling when prices dip, providing fuel for market makers to buy at low prices. This mechanism is respected because it constantly creates predictable price movements. All right, now moving on along. This dynamic is powerful because it leverages human error and emotional responses. And now, guys, we all know the market is just human behavior, right? Take a look at this chart on SPY, right? You have a narrow range day and a test and retest day. These are 2 of your 3 day types: narrow range day and test and retest day. The other one is a trend day. You didn't get a trend day today. This is a test, retest day, all right, inside of a bigger range. We never failed these prices. Yesterday was a trend day because we continue to make higher highs and higher lows. All right, this is human behavior. What is going on behind the scenes? All right, now back to the lesson. This dynamic is powerful because it leverages human behavior. Right? Human error and emotional responses, turning them into opportunities for profit. The respect for this mechanic lies in its ability to consistently generate liquidity and volatility, essential for active trading environments. The respect for this mechanic lies in its ability to consistently generate liquidity and volatility, essential for active active trading environment. So that gives me an edge. If you can learn to think this way and probability on what's most likely to happen and base it around human behavior, the trading game changes from there if you can be consistent with it, right? And see the power in that, because the charts are right there. And you can see this stuff happening inside of the charts. So bear traps, bull traps, using stops as fuel, when to buy call and puts, the best entries and exits, 3-day type. Alright, now I want to show you guys something very interesting before we move on to the charts. Okay, remember, this is the halftime show. This is the halftime show. Now we are inside of the consistent income skill sets inside of my Discord. Alright, and for this episode 4 of the halftime show, I'm going to show you a couple of minutes of this 3 primary rules for swing trading that I posted last year around June, the same month, 2-3 weeks away. Alright, and remember, I am not a financial advisor. I am only a mentor and trading coach. This is for educational purposes only. So let's get educated and entertained. Alright, I might speed through this video a little bit, but I want you to get the point. Alright, enjoy the show. We're going to get to the charts, so stick around. We got some juicy guidance for you. Alright, here we go.
Dr. David Paul is my guest, and Dr. Paul, I understand that you teach people how to trade. Walk me through that.
Yes, well, I'm an engineer to start with, and I started to trade way back in 1982.
Way back, huh?
Yeah, and I traded on my own until 88. I cut the corporate umbilical cord in 1988, and I've been trading on my own ever since.
What vehicles do you trade?
I trade shares over a view of 3 or 4 weeks, swing trade, and I started to trade futures intraday as soon as it became available to the intraday trader. That's some 25, 30 years ago. And over the last 10 years, I've been trading Forex quite aggressively as that became available to the smaller trader, as the internet, in fact, became commonplace.
How do you look at trades and decide what to do? What's a good setup for you?
I'm primarily a trend follower, but I have 3 rules. The first rule is the good trade is a hard trade. The second rule is that I want to fade the short-term trend against the longer-term trend.
Why?
Invariably, before the market goes up, especially in the morning, before the market goes up, it goes down first. And it goes down to the orders. The professionals would rather die than chase the market. So they will bid it, and they will bid it fairly low. And anybody that panics has got to get out of the bid. So invariably, before the market goes up, it goes down first. Many people believe it. And anybody that panics has got to get out of the bid. So invariably, before the market goes up, it goes down first. Many people believe that there's somebody out to get them. But in fact, that's rubbish. It's just professionals doing their job. And if you're Goldman Sachs and you bid the market and you control a considerable amount of liquidity in the market will go to the orders.
And the third rule?
The third rule is that I want to put my entries where the masses put their stops.
Pay attention to this part. This is very important. This is part of bear traps and bull traps, the mechanics, all right? Spoken from the guy in the money show himself, all right? And we're going to further continue this to bring it on home for you.
Most people will put their stops at very predictable places. If you're an institutional trader, your job is to generate the liquidity to get into the position. You just can't press the button like us. So invariably, the market makers will not know where the stops are, or they couldn't be bothered to find out. But they know that most people will put their stop a tick or two below the last low. And invariably, the market will go to where the obvious stops are over and over and over again. So rule number 3 is I want to put my entries at the obvious stop. So the next time you're going to put a trade on, and just think, where would I put my stop? And just as you think that, pick something heavy up from your desk and smack it around your head. And rather than putting the order in, put the order in at where you would have put your stop, and just watch how many times the market goes to that.
David Paul, thank you.
All right, guys. That was a 2 or 3 minute edition of what I wanted to explain to you about that. I hope that was really, really good to you, okay? Hope that was really, really good to you. All right, I'm going to quickly go over some things that I put inside of the Discord. All right, we had an interesting day today. Some folks watched, some folks traded, okay? And I had fun today, okay? I was inside of AKBA, APLD, SPY, and Tesla at some point. I did cut some trades in SPY, but I'm holding swing leaps in SPY, AKBA, and APLD. I do not have any Tesla trades. All right, now I want to read this to you. All right, the market breadth is mixed. You may be setting up for bear trap into the end of the day. All right, there were some possible movements towards the upside on the SPY. All right, the game, how to play the game. When the news drops and the chart flushes, most panic. I don't. That flush, that's my edge. Flush, bounce, trap, liquidity grab, then the real move. The trap works both ways. Bull trap, retail longs into resistance. Bear trap equals retail shorts into demand. Smart money watches structure and volume, not emotions. Remember, structure first, reaction second, news last. Charts don't lie. Retail reaction does. All right, so let's get back to the Trader's Creed. All right, I want you guys to screenshot this or remember this. I'm going to read it with you, and I'm going to start implementing this because I think it's very important. All right, this is trader psychology for the mindset of a consistent trader. But none of this matters when I'm going to read to you out loud if you don't have the context of the day type. And remember, there are 3 day types: narrow range day, test and retest day, and trend day. And all 3 of these day types have percentages on when they're most likely to happen. Okay, now from the top, we're going to read the trader creeds together. Okay, you need to understand the day type in order for psychology to work. What's the point of psychology and all the fancy words when it comes to trading mentally, right? If you don't understand the day type or the environment that you're in. Very important context in addition to this episode 4 of the Halftime Show. Alright, so let's pick it up. The Trader's Creed from the top. I am a consistent winner because I objectively identify my edges. I predefine the risk of every trade. I completely accept the risk, or I am willing to let go of the trade. I act on my edges without reservation or hesitation. I pay myself as the market makes money available to me. I continually monitor my susceptibility for making errors. I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. This is a Trader's Creed. Get familiar with it, alright? Now, moving along, let's get to the charts. I know what you guys came in for. We're going to start with the SPY, alright? Yesterday, as I mentioned earlier, we had a trend day, alright? One of the 3 day types, alright? At the open, okay, you could have took that trade based on structure. You had a bounce like the guy explained, and right, it goes down before it goes up, all right, and you have that moment right here, okay, on the 5 minute, all right. We continue upward pre-market. We held the lows, all right, and now we're still holding the lows, but we could fail, right? But as of right now, we are inside of a narrow range day. Now, I want to show you a very, very predictable bear trap, all right? Remember, we're talking about bear traps. It's the Halftime Show. Hope you guys are enjoying the video so far. If you have been, go ahead and hit that like button. All right, I'm telling you guys, the market is way too good for you to be missing the best setups. Okay, if you're tired of missing out, if you're not consistent yet, or if you're giving back money, if you're losing money, do me a favor, hit that link below in the description. Get a discovery call or one-on-one coaching. All right, there's also links below for my YouTube channel. And if you do me a favor, right above or to the right, I'm going to drop a video right here, okay, right there, all right? And that video is talking about bear traps, okay? It's a nice guidance I gave months ago for the same scenario, and I want you to check it out so you can get familiar after this video, all right? I appreciate you sticking with me, okay? All right, SPY, bear trap. Where is the bear trap, all right? Where is the bear trap? We're going to start with this one right here, okay? Now watch as I explain this to you, okay? We have what we call a 2-legged pullback. 1, 2. Some people will call this a bear flag. You have your pole, your flag, the break of the pole, which will be right here, all right? The break of the pole, which will be right there, all right? And then we have a measure move that mimics this move, all right? Okay, 2-legged pullback. Now what happens with 2-legged pullbacks? This is part 1 of part 2 of a 2-part technical pattern, right, to set up the bear trap, all right? And what happens is is that price moves all the way down, right? What tends to happen is price moves down, we get the two-legged pullback. You see that on the 5-minute on Tesla, right? Just in case you don't, let's make the screen bigger. I want those watching to be able to get an accurate read on what I'm teaching. All right, so let's make it a little bit bigger. Okay, I want you to see this in real time. Appreciate you guys rocking with me as I navigate the screen. Okay, all right, so remember, okay, you have a two-legged pullback. Here is a two-legged pullback right here. 1, 2. All right, you see that? Okay, that's what you have. All right, this is a complete pattern. All right, and what happens is rookies chase here. Don't be a rookie. Don't chase. Okay, people chase right here. Okay, if you were taking a trade to the downside, right here, right from here, and you wanted to take a trade to the downside, like the guy said, right? People put their stops here predictably. It's predictable. They get their stops wrong. All right, but what you want to do is, right, as you catch this bounce off of this parallel channel, right, two-legged is complete, all right, you want to trap the bears in twice, okay, and it makes a W shape. This is what it looks like, all right. Let the bears try once, let them try twice, and then you take off, okay. Here's your neckline, and you have price break above, all right, price is breaking above, breakout retest, and maybe a continuation, all right. Same thing we got here, breakout, all right. We broke out. We didn't even halfway get back above the 21. Okay, and this is what you want to see. This is exactly what you see right here. Okay, you see a W shape. Let the bears try once. Let them try twice. Now we know we got them trapped. Now we know where their stops are, and that we can use their fuel, use their stops as fuel. So what I'm going to do is I'm going to take off all of these. All right, pay attention. This is where the stops are right here. This is your trade. All right. Some like to call it an ORB, breakout trade, whatever you want to call it. These are where the stops are. And you want to use the stops as fuel. Stops as fuel to the upside. Okay? Stops as fuel to the upside. This is the optimal entry. This is the optimal entry. The optimal entry is here. Okay, remember, entries and exits, all right? Where will my target be? Now remember, anytime the bears, you get a big move down, all right? All right, the bears get exhausted, all right? Rookies start chasing the bottom. We trapping their liquidity, trapping their stops. We get the two trifecta, 1, 2, W shape, double bottom, right? And then we always, sometimes 90 to 95% of the time, all right? Don't quote me on that, but there's a high percentage chance that the bulls are going to try to retest these highs. And what do? We went down two-legged pull, right? Two-legged pullback, W shape, bear trap, technical bear trap. We get above the 21. We break the neckline. Here's your entry. All right. Look at that. The ATM sound. Let's do it again. ATM sound. Right here. Back to the top to retest. All right. This is a setup. That is a bear trap. Okay. The same thing for a bull trap. See? Let the bulls try once. Let them try twice. Same variation. All right. 1, 2. What they call a mountain, an M shape. This isn't your typical, head and shoulders or your triple bottom. All right. Okay. This is another type of setup. Okay. Now this right here. If I move the screen over, pay attention right here. This is an inverse head and a head and shoulders, and this is a bearish pattern, a reversal pattern to the downside. All right. You rewind this video, screenshot it, record it, whatever you need to do. You'll never forget that. When you see this show up, you can be thinking to yourself, price could be reversing. Have your entry indicator, whether that's a 21 like I use, or the breaking of that range, of that neckline right here, of that head and shoulders. But right now we have an M shape that I'm showing you right here. Once and twice. Once, twice, right? This is a technical bull trap. And you want to let them try twice. And you want to enter in on the neckline, all right? This is all right here. These are high probability setups. Had you done that on the 5-minute, you could have caught that trade from 597 all the way down to 595, which is a quick scalp 2-to-1 risk to reward ratio inside of this range. Okay, you understand? Bear traps and bull traps, the same thing. You want to use stops as fuel to the downside in this case. All right, stops as fuel to the downside when it comes to bear traps, all right? Bull traps. So you always want to use stops as fuel, all right? No matter what you're looking at. If it's a a bull trap, and you want to trap the bulls, the amateurs and rookies trying to buy the top, okay, you wait for the 2-try failure. It's called a 2-try failure before it happens. 2-try failure, and then you wait for the break of the range. That's your entry. Same way here. 2-try failure, wait for the break of the range. Now, some people buy that, all right? If I see a higher low, yes, I'll buy that. If I see a lower high, yes, I'll do that. But that's not for everybody, all right? And that is your addition of the bear trap and bull trap. Explained simple and easy. Shouldn't take that long. And what do we have today? Again, we had, excuse me, guys, we had a test and retest day and a narrow range day. Why? Because price stayed in the same range from yesterday. Why is it a test and retest day in conjunction? Because we had price move upward. We tested the top. We tested the bottom. We tested the top. All right. A little rangy, choppy movement, smaller variations of a volatile move. Tested the top again, but we fell all the way back here. But see how we created a higher low? That's my point for entry, right at that double bottom. All right. That bear trap. Another ironic way of conviction to see that this is a nice setup. Okay, you could have caught that. All right, test and retest. We are testing different ranges. Test, retest. All right, tomorrow could be a test of this inside of the range. Right, we have economic data tomorrow. Don't forget about that. We have more economic data on forexfactory.com. That's forexfactory.com. forexfactory.com, and you can check out economic data. Why am I telling you this? Because economic data such as unemployment claims, interest rates, Fed meetings, GDP, PMI, CPI, consumer price index, all of these things can affect price when the data comes out. All right, it's sentiment. What are traders looking at? All right, when interest rates are being cut, that's bullish for the market. When they're raising rates, the market is going to go down, all right? When Trump tweets, all these different types of things can affect the market when there are economic, predictable news data that is coming out, all right? And that's what you want to realize, all right? Play that range when you have a range in market, all right? Back and forth. There's your range, okay? Always remember that, all right? Now, moving on along quickly, we have Tesla. Tesla didn't do really too much today except for pay people for puts. All right, this was a H-shaped pattern, a bearish pattern. All right, we could possibly bounce here at 328. All right, to go back to the upside to make a double bottom. Maybe it could be a bear trap, but you have to wait for confirmation of a falling price. If we fall below here, we can create this measure move and fall back to 320, 325. Okay. Oh, well, actually, yeah, exactly, right here, based on this price. But if we fail this 327, we definitely can go to 320 and 325, all right? That's what I'm looking for Tesla. Tomorrow, if we wake up and we're down and we are at those prices, I will not chase those prices. I'll wait for a pullback and/or try to ride the momentum back to the upside, all right? Tesla, as of right now, is kind of weak. There is money being pulled out of Tesla. Remember, 333 was the line in the sand. I gave out a video weeks ago, I think on a Monday Madness episode, where I said that 333 is going to be the demand level for Tesla. You know, and that day it dropped there, and we got an explosive move all the way back up towards these highs. Okay, so that's Tesla. That's going on with Tesla. Let's move on to AKBA. AKBA, all right, this is the stock that I'm in. It's been running for a couple of weeks now since I've been in. I'm in at $2. Could we get some pullback? Yes, we could. Significant. I did shave off some profits today, but I'm holding this one long term. All right, holding this one long term. I want to see it break out of these channels. I like the higher time conviction. Higher time conviction is telling me some really good things. We have the volume profile sitting right here. All right, we have low volume nodes. All right, we have some vacuums inside of here. Right, I have a leap on this. January calls next year in the money. Right, so I'm looking for at least a tag of 537. I don't know when that's going to happen, but I'm in position. I'm in leaps and I'm holding. I'm not living off of this money, so that's the difference. Okay, so if we can get above, I'll just say 375 and 415, of course, $4 hit, we'll start seeing some push towards the upside. Take out these bears here to get these low volume node clusters here that acts as a vacuum to suck up price the same way it did here when it shot up. All right, so that's what I'm looking for AKBA. I'm in swings, looking for a break here at this channel. Oh man, it's going to be spicy. All right, let's move on to APLD. I'm also inside of here. Okay, this was a bull flag taking place. We are still strong. We're still holding structure. We could possibly see higher price movements to 13 and 14, 15 bucks. All right, these are those minor targets. All right, it probably are some larger targets on the high time frame, but this is a new stock, and they just did a deal. They did a deal with I forget what company it is, but I did take wind to that, and I like what I've seen as far as the fundamentals, as far as the technical patterns. I'm sorry, the technical patterns is what I like, not the fundamentals. The technical part is what I like, so I hop inside of the trade, and I am swinging a PLD. You never, ever chase, always wait for a pullback. And I guess last but not least, I can do hood. I appreciate you guys coming around and checking out the show, the halftime show for the night. All right, it's going to be a very interesting week. I want to remind you guys, quadruple witching is coming up. Talked about this before, but quadruple witching is coming up on June 20th. Okay, so expect a lot of volatility. And I want to remind you guys that trading is about the process and not the profit. It's always about the process and not the profit. All right, cash is a position. Cash is definitely a position. You don't have to be in a position, right? You can be successful being in cash, waiting for the right opportunities to show up, right? Waiting for the right opportunities to show up, all right? Because you need to make up in your mind, am I a day trader or a swing trader? Make your mind up. Make your mind up, am I a day trader or a swing trader? Focus on one thing and master that, right? Don't be all over the place. Focus on something. The best setups, okay? The best entries and exits, all right, are above the higher highs and higher lows, whether you're doing calls or puts at the 21 and the traps. I'm giving you guys an edge, all right? Make your mind up so that you're able to trade more efficiently, okay? If you want to day trade and swing trade, open up 2 accounts. Do it that way. And remember, I'm not a financial advisor. I'm only a mentor and coach, but I want to help you guys, all right? So we got more earnings. We have more data coming up soon, all right? Hood right here, we have Hood. There was a lot of talk on the Discord today about Hood. People are excited about it. They are going to be entering it into the New York Stock Exchange on Friday. I insisted that we should wait for a pullback. Sometimes there's euphoria, and understand this, Hood has been moving up for a long time, right? We've been moving up. You know, this is a big move up, right? Why would you want to chase this? You know, you could wait for a pullback. You never know what could happen, right? But it's always good to wait for a pullback, all right? Now, if I wanted to wait for a pullback, just me myself, okay? This is a very strong stock. It's a lot of people I know for sure that are in this shares and or options and leaps on this stock, okay? But what I see on this Hood stock on a micro, smaller time frame is a head and shoulders pattern. All right, we've seen one of these patterns on the SPY. All right, the other day, yesterday, as a matter of fact, doing a live, but that pattern was invalidated. Okay, it broke past the shoulder. So if we break past the shoulder, the bearishness is invalidated, and we continue to the upside. All right, 72.76. Previous top, all right, and 73.02. All right, these are your entry for calls right around your 50% mark of this 100% move, and that has been your addition to halftime show. All right, money's being made. Okay, thank you guys for watching episode 4 halftime show, brought to you by Coach UV in the Unique Trading Group, where strategy meets mindset and discipline turns into income. And remember, if you found this video valuable at all, if you learned something, if you want to pass it on to someone else, hit that like notification, all right? Hit that like button, all right? Give me a thumbs up. I would love the engagement. If you have any questions or comments, leave them below, because I talk back and I engage. And if you want to get valuable videos like this all the time, all right, make sure to subscribe, hit that bell notification so that you're informed on when I do drop valuable videos. Again, this is Coach UV. Hope you guys have a blessed night and a more prosperous week. And until tomorrow, peace.